Hi everybody, it's AJ speaking. It's just a quick update on Tesla's China sales, which were reported this morning for the week ending August 3rd. Today is August 5th. There's always a 2-day time delay. Tesla sales came in the most recent week just over 11,000 vehicles, which you can see here on the far right hand side. So quarter to date, this means we're at 49,000 vehicles. And if we compare this with the same point in time in prior quarters, this is what you see down here. The current quarter compares quite favorably and is ahead significantly of both the first quarter, which obviously is always low due to winter and Lunar New Year, but then also significantly ahead of the second quarter. And currently we are not far off from the very strong fourth quarter. As you can see here, so fourth quarter at this point in the quarter was at just under 50,000 vehicles, and as I just said, we are right now at just under 49,000 vehicles. What I don't like so much in the current quarter trend is the fact that we've been trading in this fairly narrow range for 4 weeks, so always between 10 and 12,000 units roughly. Not sure this means anything, but let's see. You can see last year the third quarter was also kind of flattish for several weeks, but on an overall higher level. But the first couple of weeks in every quarter always quite tricky, since they tend to be not highly predictive of ultimate outcome. And a good example is the comparison between the third quarter and the fourth quarter of last year. At the current point in the quarter, the third quarter was meaningfully roughly 10% ahead of the third quarter. Sorry, the third quarter was meaningfully ahead by 10% of the fourth quarter, but the fourth quarter still managed to deliver meaningfully more units. That's why we need to be careful to draw too early on conclusions about the full quarter's performance. In my last week's update, I said I'm tempted to increase my volume outlook should we see continuing strong performance. At the moment, I want to see a few more weeks before I make a final call on that. Now let's look at the market landscape. So this chart shows you the main brands in China in the new energy vehicle segment. The companies are ordered by total last 4 weeks sales volume. By that metric, Tesla is number 2 behind BYD. Please note BYD is on a 33% scale because BYD outsells everyone else significantly due to its very large both EV and hybrid vehicle product offering that counts over 60 different models. Please keep in mind the latest week here in purple was the last week of the quarter, and that is typically a strong quarter. So week-on-week sales increased in total. So if you add up all these sales that you see here and you compare them with the prior week, there's an increase of 4%. Next week we'll likely see, because it's early in the quarter, a decrease week over week. These arrows show you who is up and who is down and who traded sideways week on week. And you can see that most companies, with the exception of Aito and Li Auto, everyone else saw an upward trend. Also slight outliers, Xiaomi traded sideways. So thus far, there's very little net impact from the U7 launch, but I expect this to change very quickly once Xiaomi managed to ramp U7 production beyond the cannibalizing effects it has on the SU7. NIO's Onvo brand saw a significant increase in the most recent week, and that was partially driven by the launch of the new L90. This is a larger SUV. Although at a highly aggressive price point, i.e. a very affordable price point, which is directly cannibalizing another existing NIO product under the more expensive NIO brand. NIO also announced that it soon launches sales of Firefly vehicles in Europe. However, I expect the financial impact will be at best neutral, since NIO sells these vehicles on a tariff basis, and that's why NIO will be selling them at a higher price point. And thus sales volume will likely be quite limited, just as we have seen with other NIO vehicles across Europe for the last few years. Now let's look at the overall sales trend. So the metric you're looking at now is the trailing 12 months total on a moving weekly basis. Again, the leader by a huge margin is BYD, and please note the scale of this chart is broken. And you can see that BYD's trend is slightly weakening. Not a couple of weeks ago, the sales performance exceeded slightly 780,000 vehicles on a trailing 12 weeks basis, and has now come down to 731,000 vehicles. Now I zoomed in a bit so we can see more clearly the other players in the new energy vehicle segment. So as discussed previously, Tesla is number 2, and we can see a significant recovery in Tesla's 12-week sales rate that was to be expected after the transition to the new Model Y. As mentioned, I think last week, the brand that stands out by delivering the most significant relative improvement is Aito, which was based on this metric as of April near the bottom of this group of companies, and now managed to become a strong number 3 behind Tesla. Li Auto used to be the number 3, but has seen some weakness over the last couple of weeks. And now even Leapmotor moved ahead of Li Auto, which behind Aito also performed quite well. XPeng has been trending sideways for quite some time and offered a few months ago an amazing trading opportunity when the stock hit over $22. What sets XPeng apart is the humanoid angle, and there's a solid fan base that basically views XPeng as kind of the Chinese Tesla, and this lends the stock a significant premium. Also, XPeng's founder and CEO enjoys a strong reputation in China. Xiaomi has been kind of flat in the, let's call it 75 to 80,000 units range, but this is now ticking up, and I expect this to accelerate as more U7 units become available. Currently, it appears the vehicle is sold out for the rest of 2025. Next, let's look at Zeekr. Zeekr is a company owned by or controlled by Geely. Geely is the 3rd largest electric vehicle maker globally, but they also sell a lot of hybrid vehicles. But their Zeekr brand in China is not doing too great and is stuck at a rather low unit level. Zeekr is a more premium brand in China and is positioned above all the other brands that we already discussed. Then we get to NIO, and first we discussed the NIO brand. You can see it came down quite meaningfully. It used to be above the 40,000 unit mark at its recent peak, I should say, in July. But this brand, it appears to be is cannibalized by the launch of the other 2 new brands. One is Onvo and the other one is Firefly. I don't think Firefly does too much cannibalization in NIO because it's a different type of vehicle compared to all the vehicles that did run under the NIO lineup. But I think the Onvo brand is directly hurting NIO brand sales because it attacks directly certain NIO models that frankly offer very little or zero upside to Onvo. And given Onvo is much less expensive, a customer really has to have a NIO badge rather than an Onvo badge to go for a NIO over an Onvo. The net result of all of that, and this is reflected in my NIO modeling, is that average selling prices will come down quite substantially, as we have seen in XPeng. Volume growth will likely be impressive. Revenue growth, but because of the loss in average selling price, will come down materially and will be significantly less impressive. And that will drive ongoing low gross profitability and therefore provide little contribution margin to cover operating expenses. And the net result of all of that will be ongoing significant losses. So this next chart shows you latest search development in China, and there's a lot of positive news. So first of all, this search interest typically correlated with later demand, which kind of makes sense. If people search a vehicle a lot, some percent of that search interest ends up in demand. At first glance, it might look negative. So the solid lines are always the SUV products, and the dashed lines are always the sedan products. And this chart compares Tesla and Xiaomi. Both have only 2 products on the market. Yes, Tesla is also S and X, but it's a marginal product in China. So let's ignore those. So let's focus on these products. And you can see that the solid red line, the Model Y, is now above the solid blue line again, which is the new Xiaomi U7. So after only a couple of weeks, Chinese tend to search more again the Model Y than the U7. We need to wait and see why that is. It could be because the vehicle is not available for many, many months. And that obviously turns people away. Now let's look at the sedan products, so the Tesla Model 3 and the Xiaomi SU7. I'd say this is rather nothing burger, so both vehicles trend sideways. So therefore I expect demand development as previously basically. So this last chart in this presentation then focuses on the Model Y search interest. And the good news is that it has reclaimed now for a couple of weeks the number 1 spot, which it recently lost to the Xiaomi U7. But as I had speculated at the time, that was most likely driven by the typical launch euphoria around the new vehicle. and as I said at the time, would likely come down quickly. This is exactly what happened. Then overall, when you look at this trend for the Model Y, you can see that overall search interest did come down, but of course there was also expected for the same reasons why the U7 search interest came down around this time. So earlier in the year, the new Model Y obviously was launched in China. There was a lot of interest, a lot of influencers made videos, etc. Everyone was talking about it. And then, of course, this period couldn't last too long. And then interest normalized, and this is what we see now. So what's the bottom line of all of this? Tesla's China sales appear to be doing fine. The positive point is that search interest for the Model Y is now again #1 in China. Amongst the competition, there is some reshuffling, but Tesla still defends well its #2 position in terms of volume. And then, of course, later this year, it will be interesting to see how the larger Model Y will affect overall sales. I hope this was helpful. Thanks for listening. See you in the next one. Bye.